Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.isc.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Okay, here we go. For the sake of simplicity, remember all this disclaimer stuff that there's no way in the world that anybody's ever going to teach you anything about the currency markets that is going to be fail-safe and without the ability to lose a great deal of money. So always remember to look at the transaction costs, look at the risks and the rewards. Steve, I think we've already kind of talked about this a little bit, but I just love the fact that most of us have accounts with brokers that already offer ISE FX options. They're exchange listed, they're cash settled in US dollars, they have a European style exercise, and they can be traded as spreads, which is magnificent. So all those wonderful things you read in the books like options as a strategic investment, the butterflies, the condors, and all that kind of stuff, you can apply those same strategies to the currency markets. There's so much movement in the currency markets, Dave, on a daily basis, and today is a perfect example of that.
Yeah.
There's so much movement that trading options, even in the short term, is theoretically possible in the currency markets. You could even express sort of views that you have of the currency markets that would sort of be realized over a few days or over a week or so.
That's amazing.
Yeah, and someone said my voice sounds distant, and that's just because we're not as close as we used to be, Paul. We never talk anymore. All right. The surprise trade, Dave, we've talked about it a lot recently. We talked about it last time we were here.
Yeah.
And we'd like to update our views about the surprise trade. We'd like to update our views about how this is expressed in the options market.
Great.
All right. We're going to talk also about the fact today that it may be surprising to a lot of people, Dave, that the U.S. dollar does experience eventually a resurgence.
That would be surprising to a lot of people.
It would be surprising to a lot of people. Maybe the only person that would not be surprised is Larry Kudlow.
He's never surprised.
He's never surprised. The American economy has been strong since 1929 when he first started speaking on CNBC. All right. Surprise Arizona is the basis for the trade. Mm-hmm. It's not only a box, it's also a surprise. It's a city outside of Arizona. It's on the suburbs. It's on the fringe. Dave, it's people live in Surprise and work in downtown.
Yes, I do.
All right. The 62 simple moving average. This is the basis for what we're going to talk about today. One thing we did not adequately, in my opinion, discuss last time, and this is really your fault. No,
you can blame it on me.
Just kidding.
Dump it all out.
One thing we did not adequately discuss last time is that everything that we're going to talk about today is applicable and can be used with any moving average that any trader out there wants to use. And from the very start here, I'm going to type in the all attendees. I'm going to type in a link, Dave, where all of the attendees can get a copy of the spreadsheet that I used to present this information, to make the charts, and to analyze everything. One thing I absolutely love, Steve, about the ISE website is if you go to the options, then you click on the currency options, Steve, you get all the historical data that the ISE has on these options contracts. And I'm just typing in the link here.
So by going to the spreadsheet, anybody can get the information that we used.
And I use the newest version of Microsoft Excel, and I don't use the older versions because of some problems with those older versions. This link that I just put forward in the presentation is a link to the actual spreadsheet that I used to present and to come up with all of this material. So you're more than welcome to have the spreadsheet. You've got to be familiar with Microsoft Excel. If you're not familiar with Microsoft Excel, there are some wonderful books that we could talk about a little bit later that would familiarize you with the product. And I use the newest version of it because it can handle so much more information. The basis for what we're going to talk about today with respect to options, though, Dave, is the 62 simple moving average.
Right.
Now, we often use other moving averages in the surprise trade with other types of other stocks or with currencies. We use other numbers besides the 62. But why would I have chosen the 62 for options?
I think it's something that you've tested, and it works out reasonably well.
Exactly. And we're going to be looking at the daily charts. And when we're looking at the daily charts, the 62 simple moving average has tested better than, say, a much longer moving average like the 100 or the 200 or something absolutely maniacal like the 800 simple moving average, which we use on the short-term spot currency market. Okay. So the basis for this is every charting package you ever have will plot this. And what's really interesting, for those of you who have brokers that will show you the EUI or the YUK or the CDD, those options contracts at ISE, you can actually chart from the spot market and trade from the options contract, meaning there's 1,000 charting packages that will offer you a spot view of the pound dollar, the British pound dollar, or the dollar Canadian dollar. There's 1,000 zillion of those. It's a little bit more difficult to find a really good options package that'll chart those contracts. So you can chart from anything and then express your opinions about the market in those options contract that we talked about before. We have an opinion, Dave, that these moving averages represent a kind of equilibrium in the market.
Right.
Now, there's an endless discussion that goes on with respect to what the best indicator on Earth is, right, Dave?
It's endless. Yeah. There's always one better than another.
I just saw this look on your face, like,
yeah, you saw me roll
holy
my eyes.
gosh, like, oh man, like this endless discussion that there is some indicator better than any others, and with no disrespect to anybody else who's ever come on.
Hey, there's good ones out there.
Hey,
sure.
There's good ones out there. And with no disrespect to anybody who's ever come on an ISE webinar and spoken about the magical mystery tour indicator that they developed. For goodness sakes, we develop our own indicators together, right?
Right.
The point, though, is that we've just found that the more complicated that we make this stuff, the worse that we do. So for the sake of simplicity and ease of use, we're going to call the 62 simple moving average a point of equilibrium. Is it the only point of equilibrium in the market? No. Is it the very best indicator of all time and all mankind?
Maybe yes.
Maybe yes.
Okay.
All right.
Okay. Maybe.
All right. There is no magical indicator, but we're going to use that. And we're only going to ask one question about the 62. And many of you who have been familiar with this discussion before that we have, all we're going to do, Dave, is ask one question about the 62 exponential moving average with respect to these options contracts.
Right.
We're going to ask, is the options contract, or is this currency pair, as expressed in an options contract, is it moving away from, or is it moving towards the 62 exponential simple moving average? Simple moving average. And we're just
that's
and
that's
that's it.
Question.
That's it. We're not going to talk about magical psychedelic mushroom patterns or whatever else. We're not going to do all that. No. As tempting as that is.
Although I do like those.
Exactly.
Yeah.
We're not going to talk about candle patterns. We're not going to talk about moving average crossovers. We're not going to talk about filtering out our trades with an oscillator of any kind. We're not going to use pivot points. We're just going to focus on this, and we're going to tell a story about a currency through a moving average. And that's going to be the template by which we do it. We're going to put on a pair of shades, and those shades are going to filter our entire world. And we accept that we can't wear 15 pairs of sunglasses at the same time. You know, actually, this is the only discussion about trading, really. I mean, I know we have a lot else to talk about today, but this is really it. Don't we find over and over and over again, Dave, that everybody complicates this too much?
They do.
It's two things. It's money management. Wait.
No.
That's it.
That's it. It's money management.
All that ever matters is that you don't lose a significant amount of money. That's
right.
it. There is nothing else. If we can't ever get on top of that story, and that is the major story in the markets today, the major story of IndyMac, of Bear Stearns, and of Warren Buffett, you know, the contrasts in the success of John Paulson, I think it was, the hedge fund manager that made something like $10 billion last year or whatever the crap he made. Mm-hmm. The story in all success and all failure in investing is the story of money management. It has absolutely nothing to do with picking a great system, with reading enough books that you figured out the magic secret to the market. That's all just crap.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.